evening, and welcome to Credit Talk. We are back. We were on hiatus for a little bit. This is my first show, so I'm really excited to be back on TV and helping the consumers out there in the Chicagoland area achieve better credit, get what they're looking for, help them purchase homes, just live a better life. We are very fortunate tonight. We have John Goldman on, who I've known for years, and he is a mortgage banker. This is a live TV show, so if you have any questions regarding what does it take to get a home loan, what do you need, what are the requirements, and obviously what type of credit do you need, give us a call right now. It's at 312-738-1060. That is the number located below. Our lines do fill up, so please give us a call, get in queue, and we'll be more than happy to answer your question. So, John, thank you very much for being on tonight.
You're welcome.
Tell us a little bit, what, for the first-time buyer, what do they need to do to purchase a home? Do they talk to you first, or do they talk to a realtor? What do you recommend?
Well, I think it's critical for us to talk with us because we usually, being bankers, are leading the train as far as the real estate goes. Because without a loan, you're not going to be able to buy your house typically. So I really recommend coming to us first in order to get pre-qualified for your mortgage.
And I agree with that 100% because we get people calling the center all the time, basically saying that they're trying to buy a house and they have a contract on a house even.
Yes.
And then, they talk to somebody like you who's going to get them a loan and you say, sorry, Mr. Smith, you got credit issues or your loan to debt is all out of whack.
Right.
So we, as many of you have seen on the show before, I've mentioned it too, don't put the cart before the horse. The first guy you want to talk to is somebody like John that's going to give you a pre-approval. And what is it actually? What do I do with this pre-approval?
Well, it's actually a pre-qualification.
Pre-qualification.
Pre-qualification now. So, we always preach the most important thing is this, credit. Credit's going to be driving our transaction. The reason why credit drives our transactions are because it affects our price, our down payment, and what we could do. So getting pre-qualified up front is critical so we know what program we could put you in or if we have any issues moving forward.
Okay, that is really good to know. As I mentioned to you, these phone lines do light up quickly, so let's go to our first call. Hello, caller.
Hi, how are you?
Excellent, and you?
Good, thank you. Where's your suit, Todd?
It's casual day.
I got a email from my condo association, or actually my apartment association, saying how to qualify for $15,000 down payment. I have an 812 credit score, and I have a full-time job, but it would be always nice to find $15,000 for cash for a down payment. Could you please explain this to me?
So what you're saying is they're offering the bank is offering a $50,000, or is it some sort of grant, government grant?
That's what I'm not 100% sure. It says how to get $15,000 down payment money.
Assistance.
Oh, okay, so it's what they call a DPA or down payment assistance program, and there's several that we have throughout. You have IDA, you have some other down payment assistance programs with the City of Chicago. So it depends on which one, but there are down payment assistance programs available throughout, and we do a bunch of them. So we could definitely help. We also have low down payment options, such as if you're a veteran with VA or FHA that allow you to put down as little as 1.5%.
John, can you touch base, as far as like grants, and I've heard of this before, the City of Chicago, do you know much about, like, what do they give you, and how do you qualify for something like that?
Well, like I said, there's 3 or 4 different DPA programs or down payment assistance programs that are available, and depending on, it could be anything from, there could be household limits for how much you can make for income. It could be a whole variety of things. So depending on what your criteria is, or what specific things are going on with you will depend on what programs you can fit into with the down payment assistance program.
And, sir, how is you said your credit was an 803?
812, I think it was.
Oh, okay, so he's off the line. So, yeah, his credit score is high enough, so that's good. And what is, people call me and say they want to get an FHA mortgage. And what's the difference between that type of mortgage and a conventional mortgage and a jumbo? What type of different programs are there out there?
So, you have government programs which are FHA, VA, USDA, and other varieties of government programs that are available. Usually they're offering some type of low down payment assistance or programming for you. Mm-hmm. Usually, like I said, it could go down, credit scores for us could be as low as 620. on an FHA loan that we could do for you, or VA loans. So we have lots of options available for people that are looking at, for a variety of mortgages.
So say I'm buying a place for, say it's $250,000.
Okay.
What is the minimum amount you think I would have to put down? Say my credit's, 680 or so.
Well, you do that, once again, if you're going to go on a conventional loan, it'd be a minimum of 3% down depending on which program. We have Fannie and Freddie Mac, Fannie Mae and Freddie Mac have two different types of programs available that could be low down payment programs for you with as little as 3% down. But once again, FHA could be as little as 1.5% down, and if you're a veteran and you qualify for the VA loan, you could have 0% down.
Well, that's nice.
Yeah, with no reserves too. So it's a good option. Thank you for serving for our country, and that's what we do.
No, I like that. I like that a lot. And do people physically have to go meet with mortgage bankers in their office, or can you do this online now? I mean, everything, nobody wants to leave their house. Everything is text, and,
So my philosophy on this is that when you're buying a home, we want to take the time to invest in you. You should hopefully take the time to invest with us. And we like to meet with everyone in person if possible. We understand schedules, timing, sometimes that doesn't work. We do have the ability to do an online application, so it makes it very easy. You could fill it out online, and it, populates to us. And so once again, online's an option. We could do it over the phone, and we recommend coming into our office to do something because being face-to-face, we can answer a lot more questions. And we're big believers, if we could get rid of the anxiety that starts the process, the whole process will go smoothly.
What about, we get calls at the center a lot, and I mean, I know the answer, but what do you tell people? So they want to buy a house, and I said, okay, how do your tax returns look? Well, I haven't filed them. I go, what about the previous year? Haven't filed. So they haven't filed them for 3-4 years. Can you even get them a home loan without tax returns?
The answer is no.
That's
Right, but once again, if you have tax returns that have not been filed for several years, you can file them. I mean, there's going to be penalties that are going to be addressed with them, but it's not an issue. File the tax returns. Let's get you caught up and get you in a position to buy.
Well, a lot of time when I've just talked to these people, most of them have a refund coming. I'm like, well, why didn't you just even go to like one of these local tax offices that are in the city? They're all over the place at tax time, but people, I don't understand. But that's a whole other topic.
The Statue of Liberty.
I love that guy. So I already put this out on our website. Well, before we do go to our email bag, we do have another call. So let's go to that call. Hello, caller.
Hi, yes, I did a short sale that was completed back in February of 2013. So I'm wondering, when can I get back into the market to buy a house, a home? My credit is okay. It's not great. It's around 600. So what would that entail? Do I have to wait a little bit longer before I can get back into the housing market?
No. If you've been past your short sale, you've reestablished good credit since, 2 years is our rule right now, that we're able to go and put you into one of our portfolio products. So no, you could get back in potentially into the market.
That's good news. And what for our viewing audience out there? What is a portfolio product?
So there's different types of products. So you have government products, like we said, FHA, VA, USDA. You have conforming products, which are done through Fannie Mae and Freddie Mac, which are once again quasi-government entities. And then you have portfolio products. Portfolio products are done by banks, and they're held on their balance sheets, so they're typically not sold into the secondary market.
So what I understand is that we'll send some people from the center that call us that make a lot of money, but there's circumstances that they have properties and this and that. And it might not look good for a government bank, but it makes sense to a bank.
Correct.
And a bank will understand and take those type of loans.
Yeah, we make.
So
no, we were saying, we make decisions on those based on, once again, the criteria of the overall loan, not just based on some regulations from Fannie or Freddie sometimes.
Okay. Do we have another caller on the phone? It was flashing. Yes. Okay. Let's go to that call. Hello, caller. Caller, are you there?
Hi, yes, I'm here. My question is, I'm not exactly ready to buy a home yet, but I did want to start working on my credit. If I call Credit Talk, will you guys be able to pull my credit and tell me which accounts I should start off paying?
Well, what we can do is, yes, we'll point you in the right direction, and there's certain websites we can direct you to obtain a copy of your credit report. We'll do this with you on the phone, and once you pull that report up, and then if you want to email it to us, or we can discuss it over the phone with you and tell you steps that you need to do, as far as if you have negative information or we look at things like balances. A rule of thumb is, which will lower credit scores, and John will mention that as well, is that you want to be under 30% of the credit limit. So if your balance, we're going to go over all these balances with you, and we do this, it's complimentary. We'll be more than happy to just point you in the right direction. If it's $1,000, you don't want to be over $300. 30% is the rule of thumb. Now, if you're maxed out on all your cards, that's going to definitely lower your credit score. And usually, if there's no derogatory information, John is basically going to tell you, try to pay these down. But usually, as you know, there's a catch-22. Why do people have high balances? They don't have the money. So it's kind of tough. Sometimes I've seen people get a little bit creative and juggle one credit card, money from here to here, and it works. So you got to kind of play around. And I know that a lot of mortgage companies out there have tools that they can kind of predict what your score will be if you lower the balance on this, move it there. So there are definitely ways of doing it. Or what about gifting money? Can a parent give a child money towards a down payment?
Yeah, it could be. It doesn't just have to be a parent. It could be a relative, and you could give, depending on the program, up to 100% of what's needed for the down payment as well as closing costs as a gift. So there's ways to get around that for sure.
And I get this all the time too. Well, I make $75,000 a year. Well, Mr. Smith, what do you show on your tax returns? Well, I don't like to pay taxes. I get that. Well, do I? I don't think you mean it.
Well, the old adage goes like this: good for mortgage, bad for tax, good for mortgage.
Right. So yeah, and I showed $19,000, but I make $75,000.
So what you're specifically addressing is when someone's usually self-employed, they have a Schedule C on their taxes, and they have a gross income, and then they go ahead and write off all their expenses, office space, travel, stamps, whatever it is, and then it gets a net number. We need to use that net number for qualification purposes because that's what you're technically reporting as income to the government.
Right, exactly, and sometimes I hear it, and I don't like making comments or whatever. It's lived the. As they say, pigs get fat, hogs get slaughtered. So you got to be careful.
Yes.
We're touching a whole other subject here, which will bring a CPA in one day. So let's go to the email bag, as I like to call. We got a lot of emails when I put this one out there. Scott over in Naperville actually sent this one saying, "What type of credit score does a bank require for a home loan? What's the lows and what's the highs?" And you're talking jumbo loans versus just FHA or whatever.
All right, so in general, your threshold is you're looking for a conforming and or FHA loan, or even a VA loan. You're looking at about a 620 credit score. It's kind of the threshold.
That's not bad.
No, it gives you a lot of flexibility. Once again, using tools that you have and to help people get their credit scores up could also be a very enticing tool, to help get into different programs. When you get into the jumbo world, you're really looking at a minimum of a 680 credit score before you're able to really be effective in getting a variety of programs. And really, the threshold tends to be closer to 700.
And what is a jumbo loan? Sounds like a big one.
So it is a big one. Anything over 424,100 on a one unit would be considered a jumbo loan.
And very interesting to let our viewing audience know, jumbo sizes vary from state to state.
Oh yeah.
I think in California, depending like in LA or whatever, they're $700,000-800,000 on a jumbo.
So that's called a high balance loan, and so there's several states, one of them being Hawaii, another one being California, and I believe New York too, that allow for expanded loan amounts based on the average cost of living there.
Right, just because the properties are so expensive out there and everything as well. So. But if I'm going for a VA loan, let's say my score is 780. Am I getting any better rate than a guy with a 640 credit score?
Once again, it depends on the program that we're on. So some programs do give bonuses effectively, or giving a discount for good credit. Some do not. So it depends on the program that you're on specifically.
But bottom line, as many of our viewers have heard me preach over the years, that you want to have a good credit report. Make sure that you check your credit report a couple times a year. A lot of times people call the center, they'll say, "Oh, this account is on here. It's not mine." And there's errors, and I'm sure you've seen it.
I know it happens all the time.
You've seen it over the years, errors and stuff. So you want to make sure and tackle that properly. And if you're looking for a credit repair company, as I've always said, go on Google credit repair, see who's out there, just as the same as you look at a restaurant. You want to see what the reviews are. Review them, call them, make sure that they're As we said, they need to be licensed, bonded. Make sure that they're a legit company, because you got to be careful with any type of business. There's some good ones and there's some bad ones out there too. So yeah, so do your homework as we suggested. Okay, we get this a lot of time at seminars and everything. Barry from Highland Park actually sent us a saying he, how does he go about that? What kind of can he do a VA loan on an investment property?
No, so VA loan has to be only owner occupied. So, but you
Okay.
can do with Fannie and Freddie both. They allow low down payment options on investment properties. We can do 10% down on a single unit, meaning a condo and or a single family, up to $424,000. But once again, when you get into the investment world, it's a whole nother world for people to really venture into. So I don't, we really highly recommend coming in, talking to us, talking through the benefits of investment property versus using that money in other types of avenues.
So if I'm a guy and I come in, because I know you have a little background, if I'm a guy that comes in and tells you that I've never owned any investment property, but my cousin can sell me a 25-unit building, and what's your advice to me? Do it or don't do it?
Well,
do you know what you're doing?
A, depends on how cheap the building is, but B, run. No, really surround yourself around good people that could give you good counsel. Attorney, CPA, banker, credit people, to make sure that you're making good credit decisions and good decisions with your money, because who knows? I mean, who knows if there's going to be problems with that building?
Right.
What happens if there's a roof leak?
Right.
You have no money left to pay for it. Then what do you do?
Exactly.
So.
And that's why I'm just kind of joking around here, and we get that a lot too. And I'll ask, I tell the people, what experience do you have?
Correct.
You don't want to start with a 25-unit building. Maybe get a 3-flat. You live in one of the units, and which is an excellent.
Which is a great way. That's a great.
And let
avenue.
these renters pay your mortgage, and you live for dirt cheap or free.
It's a great avenue. In fact, with FHA as well as conforming loans, they allow us to put. You don't have to put 25% down. You could put as little as 5% down in a 2-unit FHA, and you're able to, or sometimes even less. You're able to get into a multi-unit property. And what's great is you now have a renter that's paying for part of your mortgage. It's one of the best investments you could do.
And you can live. I know a lot of people that do this, and their rent is nothing. I've seen even people making money on the deal and living it, and then that's an asset that you're going to have for hopefully appreciates. They're paying down your note. And you live for 3. Hopefully you don't have too many headaches with your tenants, which there could be.
It could be, but it's
screen them.
It's communal, yeah. Screen them. Get a credit report on them. And most importantly, like I said, it's a great avenue for you to go and put dollars into that are going to return long-term gains, hopefully.
Right. Is there any difference between and I'm not mentioning any company names here, but if you go to a mortgage broker or a bank, what is the difference between going to either or?
Okay, so a mortgage broker is going to go ahead and they typically are not. They are going outside of their own facility in order to get lines of credit to go and lend back money out to the individuals. So in this case, you could look at when you're brokering a loan, they usually have to borrow a bank's money to fund it. So when we're mortgage bankers, which we are, we use our own funds. So it's the bank's own money that we use and we lend out to the community to do these loans. So that's a big difference. One's our money, being a broker is someone else's money.
I see. So yeah, so
the true definition of a broker.
Right. That's good. So I mean, if you have a relationship with your bank, it's not a bad idea to start with them and talk. And like anything else, shop it.
Shop it.
You got to shop it, because one guy might give you one rate and
rates vary. Yeah, rates vary across the board. In addition to that, programs vary from bank to bank to broker. Programs could vary, so it's critical that you do your due diligence, you shop, and the internet's a great resource, but it's only a resource. You need to find someone that you trust in order to get good information from.
What happens? Mr. Smith buys a property. They're asking $400,000 for it. They do all the work with you, and then you send the appraiser out to get the value of the home, and the appraisal comes back at $360,000. Are you going to fund that house? Are you guys going to do a loan on it?
We're not going to fund the house. Well, we will. We'll go off of the lower of the two, the purchase price and or the appraisal value. So whatever is lower, we will go off of. Now, once again, there may be some material issues with the appraisal. An appraisal is an opinion of value. Once again, and two appraisers can have a 10% variance in opinion and still be within guidelines. Mm-hmm. So an appraisal is an opinion of value. So you'll want to make sure you're getting a good appraisal, and you want to make sure you're using.
Can I pick my own appraiser?
Absolutely not.
Oh, darn it.
Independent, third-party independent appraisals only.
So what happens if we know that all 5 of these homes have sold for $400,000. It's an identical house,
Correct.
but this appraiser says it's $350,000, and we don't agree. Can I say, John, can you send another appraiser? Can
Absolutely.
You do
So
it?
we have the ability, at least with our bank, we have the ability to do what they call rebutting the appraisal. So if we have material information that's different than what the appraiser pulled up, we have the right to present it to them, then rebut the appraisal.
Does that happen often,
Yeah.
or?
Yeah, it happens a lot. Yeah,
Uh-huh.
actually, and we're quite successful at it most of the time.
Because I agree with you. I've seen that, on my properties where
I had
they'll-
it happen yesterday.
Yeah, and you'd be like, you look at your appraisal, like, what is this guy's comping me, looking at other homes meeting, and the house isn't even similar, and location could be totally different and everything. And
Listen, the appraisal world is a very difficult world right
Right.
now, and it has a lot to do with the amount of appraisers out there are very limited, and the amount of quality appraisers could even be more limited. And a lot of this has to do with what happened over the last 10 years as
Right.
far as the housing crisis. So, you gotta work with a quality institution that has quality resources, that's employing people that know what they're doing.
Right,
That's why I want-
and just FYI, everybody, a appraiser does need to be licensed through the
Yes.
state of Illinois.
Absolutely.
John is licensed as well,
Yes.
and so is a realtor.
Yeah.
But years ago, remember the mortgage brokers and bankers? I don't know about
Wild
bankers,
West.
but
Wild
they
West.
weren't.
Nah.
I could never figure that out. I was like, you're telling me that the real estate agent has to be licensed, the appraiser, but the guy that's lending you the money, he can do whatever he wants. Basically, doesn't have to be licensed, and he can start tomorrow and be doing loans. Which I'm glad that they did regulate that and make it licensed, because they should be. They need to be regulated.
Listen, the bottom line is this: when you're doing a mortgage or buying a house, it's probably the biggest investment you've made in your life. So
For
it's
sure.
important to surround yourself once again on quality people that know what they're doing, how they're going to do it, and can get you to the finish line in a quick and efficient way. So it's like anything: make sure you do your homework, and like I said, it's important to just be around quality people that give you good advice.
And obviously, you've done a lot of closings in your life, and
we're probably pushing close to 3,000. Yeah.
okay, so all right.
There's a lot.
Call me when it's 4. So, what about people ask me, do I need an attorney? My friend who's in St. Louis, they don't have attorneys. They don't use attorneys.
That varies state by state.
Right.
And once again, certain states don't require it. In Illinois, there's a new disclosure that came out that, saying you have a right to get an attorney to review all your information. I highly recommend it. Listen, once again, I go back to this is the biggest investment of your life. Why would you not spend the $500, $600, $700 to make sure that you're getting clear title, that the contract's right, that all these issues that an attorney takes care of it properly. You're not a professional at buying a house. You're the person buying the house.
Right.
You got to rely on professionals.
I agree with you 100%, and I realize how, because we only have a minute or two left, but I understand how attorneys make their money. But if they're on the other side and they're charging whatever, anywhere from $350 to $600-$700, they do a lot of work.
They do a lot.
They review the inspection. They go to the closing. And a lot of times there's issues, and it's...
Yeah, I mean, one of the things is,
It's
especially
well
if
worth your money.
Well, if you're buying a condo, especially, someone's got to review the deck, the budgets, the bylaws. It's important to know what you're buying, and make sure you're getting once again a quality unit. And when negotiations start between a buyer and seller, you got to have someone there that could say, hey, based on my experience, this is where I think you're going to be.
Right, I agree with you 100%. It's money well spent, and inspectors.
Once again, money well spent. As long as you could find a good quality inspector that's going to get through that house, finding the problems up front are critical. If you miss, like I said, a roof leak or something that could effectively cost thousands of dollars, and you don't have the money, what do you do?
Right.
So
We've had real estate attorneys on here before, and they say the same thing, because then what they'll do is they'll take that inspection, go through it, and if there's $10,000 worth of problems, they'll go back to the seller and say, okay,
price
we
reduction, credit, something, or fix it.
Right.
And
right,
which is we prefer the fix it.
right. And a lot of times deals are lost too,
Yeah, a lot of times people don't want to fix it.
Right. They're like, they didn't say, or they don't even know about it. Next thing they know, and then maybe it goes back on the market, sold as
Something
is.
else.
So, which
30,000 less. What can I
but
say?
so we are running out of time. If you did not get through, or a lot of times we get people that just don't want to talk on TV live, the help center number is behind us, 773-862-4000. Call now, leave a voicemail. We'll get back to you with any of your questions. John, I do want to thank you very much for being on our show tonight. It was awesome. If you have questions for John as well, leave it, and we'll get your information to John. and very reliable source. And if he's for some reason not the right guy, he'll point you in the right direction.
Absolutely.
Been doing this for how many years? You've been doing this now? I've known you for a long time too.
Going on 20.
20 years, excellent. And I'm only 22.
I'm 23.
We're young. So I really want to thank everybody for watching tonight. We will be back next week at 6 p.m. channel 21, and check us out on YouTube as well. Thanks a lot. Thanks, John. We'll see you next week. Bye.